Hi traders, this is Cynthia of Day Trade Forex, and I have some new enhancements to my Trade Manager trade button that we use in the Green Tomato system and also in the Pro Currency Strength Meter system. And so because of the new features, I thought I'd make a quick training video to show you what they are. And I've already placed a couple of trades. I've been testing the features since last week, but we made some more tweaks over the weekend, so now I'm testing these new features that I think you're going to really like. And if you've purchased the Green Tomatoes system, the Advanced, the Extra Advanced, or the Extra Advanced Pro, then you would have my trade button as part of the trading system. This is my trade manager that places trades with one click, so you can click buy or sell, and with one click it places your trade at a risk to reward ratio of 2-to-1. So that means that your reward is always going to be double that of your risk. So your reward is your take profit and your risk is your stop loss. So, and then if you want to close a trade really quickly on the chart, you just click close. One of the new features is the reversal button, and let's see, I have a trade on in the pound CAD, so I'm just testing this. I'm not saying that my entries are perfect or anything like that, because the market just opened not even 2 hours ago and it's pretty sluggish, and the spreads have been pretty wide, so I at least waited for the spreads to come down to start the video. But we have an open buy trade here for the pound CAD, and so here you can see is where I purchased it, and it placed the stop loss down here, which is a great support area for the stop. And then here's the take profit up here, which is in the red overbought zone. So this, although this is a medium term overbought zone right here. So I'm not saying that this is the perfect trade. I'm just trying to test the trade button so I can show you how to use it with the new features. So one of the new features is it has the buy break even plus some pips. So that's this level. There's an actual green line here. It tells you that according to this trade, that my break even, that the trade manager will move my initial stop to break even when we hit 18.8 pips in profit. So when this trade moves up to hit 18.8 pips profit, is going to move my initial stop loss to break even, and then it's going to also book 1/2 of my trade. So down here it's 0.02, so 0.01 will be booked as gain, so that gives me an 18 pip profit gain locked in already, and then the other 0.01 is going to be trailed by whatever the setting values are inside the trade button. I'll show you that. So right here is where the trade would start trailing after it's reached break even and then locked in 18 pips. So that's the particular set file or the default trade management inside of the button. So I'll get into that in a second, because we have to click the smiley face to get into the inner workings of the trade manager. Right now I just want to, I think for this pound CAD trade, I think I just want to show you a reversal. I'm going to show you how quick this reversal button works. So I'm in a buy pound CAD trade, so I'm going to click reversal, and you can see what it did. It closed my trade and then immediately put on a sell trade, and it's got the same parameters because of I didn't change the set file values inside the trade button. It just used the same values as my buy trade. So now I have a sell trade going on. Here's my new take profit. Here's my new sell break even, and that'll be at 20 pips, and then there's a first take profit here of 30 pips, so it has to reach that. Once price reaches 30 pips, it's going to move my initial stop to break even plus 20 pips, and then it's going to trail by X number of pips, and that is determined by what subfile I've chosen inside of the trade button. And here's my new stop loss. So if I allow this trade to get stopped out, that's a 59 pip stop loss, but the take profit is 118 pips if this trade goes in the opposite direction. But the buying and selling of the trade right now is not the important thing. I just wanted to show you the different features now with the reversal button and also the potential buy and potential sell, and then we'll get into the inner values behind the smiley face here in a second. So on the pound yen, I had placed a buy limit trade. So what I did was, I see that price is down at the bottom here. I'm ignoring that the daily Z lag is not in the proper position because I'm just trying to show how I place this trade. So this was my potential buy trade, and it has the take profit. It immediately placed the take profit and then immediately placed the stop loss down here. So it's at a risk to reward ratio. Actually, this is better than 2 to 1. It's almost 3 to 1. So this is an aggressive trade here. It hasn't actually initiated the potential buy, the buy limit, but we're within 10 pips of it because we have a green color here. So if this trade goes down just a little bit more, it's going to hit my buy and it's going to activate this buy trade. So let's actually go to another chart and let's place let's see, the spread's 5.1. That's okay. Now we're in the pound New Zealand dollar. A couple of minutes ago the spread was like 20 pips. It was untradeable, but right now it's tradable, and we're in the advanced system, so we don't have the red overbought zones and the blue oversold zones. The advanced system just has the currency strength meter and the trade button. And if we look at the currency strength meter, the pound is neutral, yellow is neutral, and the New Zealand dollar is yellow neutral, so those colors are the same and the numerical values are very close together. So that's not a potential trade. I want something where there's some difference here. So we could take a look at the CAD US dollar or the US dollar Aussie US dollar. Let's go make a new chart here, or maybe I have AUD USD already up. So okay, so we have a double trend line that's sloping up, so the trend actually is up, but we're having a pullback right here, and the Aussie is very weak. So because we're in the Aussie US dollar and the Aussie is weak, the price is going down. So here's where the price is right here. This is the ask line where the candle, this is the minutes left on this particular candle. So I could put in a potential sell at this point just to show you how to work it. And here it places the lines. Here's the potential take profit. Here's the stop loss. These are the values for the trade manager, the trail itself. So it needs to get to 30 pips to hit the first take profit, and then the initial stop loss will be moved to break even plus 20 pips. So it'll trail behind price at that point, and you'll have a risk-free trade with 20 pips already locked in. But I haven't actually initiated this potential sell yet because I want to show you what to do. You have this white line here, so this is what you need to drag because you want a little bit of a pullback so that you can get a little bit better sell entry. So I would pull it back, and that would change the price. So when price reaches, when it pulls back a little bit to this price right here, then it's going to initiate the sell trade. But I need to, at this point, take one more step to actually place this potential sell trade. I already clicked potential sell. That gave me the setup lines on my chart, but it hasn't placed the potential sell with my broker yet. So the way to do that is just to click sell. So now the lines stay on my chart. This is my trade setup, and down here now I have the Aussie dollar sell limit, and this is the price that it needs to pull back to in order to initiate my sell limit. I hope I explained that right to you, and we'll see what happens because price needs to pull back. I might have needed to pull it back just a little bit more, but see, if you hover, you can drag to modify, so I can pull that up just a little bit. Oops, I haven't done this. You have to do this. So now my sell limit is when price hits 71.26, then it'll open up a sell trade. So it's 10 pips away. So you can see here 71.26. Now we're 10 pips away. It needs to pull back to 71.26 and it'll open up a sell. So what that does is, instead of placing a sell trade here at the bottom of this candle, you can see I have 27 seconds left on this candle. I didn't place a trade at the bottom of the candle. I'm hoping that it's going to pull back on the next candle and trigger my potential sell, which is my sell limit. It'll trigger it if it pulls back to 71.26. And then we'll be in the sell trade. Then this sell limit won't be in this window anymore. It'll be up here. That's how you work the potential sell and the potential buy. So the idea is that you find a trade setup. Let's look at the pound Aussie. Well, we're in the extra advanced. So price is going to pull back a little bit, but it's going to keep going up. So I'm going to, well, we have the daily Z lag down here, so we might just be in a little tiny pullback. It's hard to tell at this point that we might be establishing a new uptrend because all of this has been a downtrend. This could be a little pullback. But let's pretend that the daily Z-lag line here is actually either above the purple line or the yellow 4-hour line is below the purple line. Right now, the trend is mixed. There is absolutely no trend whatsoever. So in real life, I would not even consider placing a trade. Hard for me to do it if I can't consider it. Okay. Here we go. Maybe gold. Okay, gold is down near support, but it might pull back a little bit and continue down. I don't know. Of course, the double channels are not sloping up and they're not sloping down, so this is just a sideways price action. And so it doesn't tell you anything, and you can see here the range is pretty small between this overhead resistance and this blue support. Use your crosshairs to see what kind of potential. It's 150 pips. So you've got a small range right now of 150 pips, but is the price going to go up, or is it just pulling back in order to go back down again? So I'm just going to pretend that price is going to go back down again if it pulls back somewhat. So I would click potential sell. Okay, so then we have our white line. Move the white line. up a little bit, say it at 1900. Okay. And then if price on this candle or another candle pulls back to 1900, then if I think that it's going to turn around and go back down some more, because support 3 is down here, so it could get down to support 3. Now at this point I'm just guessing, because this is not real trading, and I would never place these trades in real life the way I'm showing you, but I just want to show you how to use the button. So now we've placed a potential sell because we think that it's going to pull back up to 1900. So that's only 6 pips or so, 5 or 6 pips. That's not very much, even on a 1 hour candle. So it can easily pull back that much and then turn around and go back down. So if I'm convinced of that and I think I want to actually place another sell limit trade, I just click potential sell. I drag my white line to where I think the price is going to pull back to, so I can get a better entry. That's why you do that. And when you're sure this is what you want to do, then you click sell. Okay, it's not placing the order, and look at why. Look at the spread, 30 pips. And now I'm going to have to take you inside of the button to show you what the allowed spread is, because I didn't change my set file. So if you do this, press the button at any time and nothing happens, first thing you check your experts. I don't see it in a message here about gold. There's no message in journal about gold. So that means that my set file isn't correct. So what it means is I need to go in here, change my set file. So I click the smiley face and I look, my maximum spread here is 8 pips. We've got a spread here of 31. So we know right now at this time of day the spread on gold is really big. So what we need to do is change to a set file, because this is the default set file and it's for currencies, and you don't want to have a maximum spread allowed of more than 8 pips. However, when I'm trading the pound New Zealand dollar, sometimes I'll change this to 10 pips. Sometimes it's moving fast, but the spread is always a little bit bigger on the pound New Zealand. So you can adjust the spread if you need to, but we have the set file, so just click load. We're going to go find the gold set file. Here's a gold scalp. Let's just choose the gold scalp. Double click that. Now it tells you that your maximum spread is 100, so it's more than 28 pips or whatever. It's fluctuating. Use manual lot size. Instead of using a risk percent, we want to use manual lot size. So say you have 3 choices here. If you click this little down arrow under lot sizing method, use manual lot size or use risk percent of account balance. Or if you want to be really conservative, and this is very important for trading the CFDs or gold or anything, to use 2 micro lots per $1,000 account balance. That's pretty conservative. That means you're not going to be over leveraged unless you just have too many trades going at the same time. If you want to have complete control and know exactly what your lot size is, just use manual lot size. So now we've got the gold scalp set file chosen. If I scroll down here, I'm going to show you a couple of new things we've added. One of the things is exit by dollar profit settings. So it says true. So the default value, if a pair hits $100, no matter what lot size you're using, of course the bigger lot size is bound to hit $100, easier than a small lot size. But if you're using a small lot size and you want to change this and make it a little more realistic, you can change it to 50. If you're using a smaller lot size, you can even change it down to 10 if you want, or 20, whatever. That means whenever this particular pair on this chart hits $10 profit, is going to book and close the entire trade for you. So you might want to just keep this set at a higher value, because this would be useful if all of a sudden something that you were trading just took off and went crazy and you could catch it before it pulled back. So this kind of defies the trade manager as far as the trailing stop goes. So you may or may not want to use this. If you don't want to use it ever, just double click it and change it to false. So you have to decide, each trade's going to be different. Each trade is going to have a different potential, and you may want to activate this by turning it to true, and then again you may not. So now we've chosen a gold set file, and it has the increased spread for gold. So all of the indices have much higher spreads. Actually, these are not, when you're trading the indices or gold or silver or oil, it's not really pips, it's really points. So in actuality, when it's points, there's always an extra zero. So when you're trading gold or oil or silver or any of the indices or Bitcoin, the spread is always going to be in points. So when you trade the indices or metals or oil, you have to add an extra zero onto the pip. So this is in reality 10 pips. But because the indices and metals are always in points, you have to add the extra zero. But the set files have that already done for you. So I have set files created for the DAX, for the Dow, for the US 500, which is the S&P 500, for the UK 100, for the Japan index, and for WTI crude oil. So all of the spreads are figured out. They're already in the set file. So all you have to do is click load and pick your set file. All of these different set files have the appropriate spread, so you never have to worry about that. Now, the next new thing is the trade management settings, and this is our standard default delay until in profit, first take profit, pips, and break even lock-in. So in the PDF that explains a little bit easier what that means, but these are the set files for trading gold. So it means here's the use first take profit. So we have that set it true, use my trade management, that's true. Of course, this can be turned to false if you don't want to use trade management, but you can just use the trade button for buy, sell, close, reverse, potential buy, potential sell, and you don't even have to use my trade manager inside, which is really the trailing stop feature. So you don't have to use it, but make sure it's, if you do want to use it, make sure it's true. All the default settings are the way you can use them. You just have to click load and pick the particular set file for whatever instrument you're trading, whether it's an indice, a stock, a metal, or anything like that, or a currency, because the set files are completely different for the currencies. The set files are, you choose your quick scalp, day trade, or swing trade. But each of the indices or the metals, they all have their particular set file because of the spread. The spread has to be completely different for each one. Took me many months to figure out the spreads. And then you come to the trailing stop method. So this is the one that when it moves a certain number of pips, it'll book half of your lot and move your stop loss to break even plus extra pips, and then it'll trail. So let's look at the values so I can explain to you what this means. First of all, you need used first take profit needs to be true. And this first take profit for this gold setting is 40 pips. It's actually 4 points. So price has to move 4 points in order to activate the first take profit. So on your chart, it's gonna look like it says 40 pips. So I know it's confusing, pips and points, it's real confusing. So we'll just read it the way it is on the chart here. So price first needs to move 40 pips, needs to reach 40 pips, and then something really wonderful happens. If price reaches 40 pips, it's going to move your initial stop loss to break even plus 20 pips. So it's going to book half of your trade at the same time, move your initial stop loss to break even plus 20 pips. Now if you wanted this to be a different value, just double click it and type 10. But then you're going to have to change your trailing stop, because the trailing stop is always going to keep your stop 10 pips behind the first take profit. So these need to be different in value. So if you change the break-even lock-in, you're going to have to change this one. They can't be the same. But if you just leave it the way it is, that was 20 and this was 10, each time the price moves in your desired direction by 1 pip, the trailing stop will be moved by 1 pip. So it's going to keep locking in more and more pips, because when price reached 40 pips, it moved this initial stop to break even, but it also waited until it reached 20 pips in price to do that. So you already have 20 pips locked in, is booked half of your lot, and now it's trailing 10 pips behind the price. So this is actually a scalp setting here for gold. So you're not going to really make a whole lot of money with the scalp settings, but if you think price has farther to go, click load. If you've done your analysis, you could choose a gold swing set file. Now this is a little bit different. The first take profit is 100 pips, and it's going to book 50% of the trade once price hits 100 pips. At that point, it's going to move the initial stop to break even plus 50 pips. So this is a really nice set file. And then it's going to trail 25 pips behind the price. So this is a nice wide swing set, and if you've determined that either your buy or your sell potential trade has the ability to move 100 pips, you use your crosshairs to determine that. You want to see this is your support area, this is your resistance, you have some targets, and you just have to do your normal analysis and decide if you're going to use a swing set file, because this is a really nice trailing stop for a set file. Now, some traders have expressed to me that this particular trade method or trailing stop method, which is the default, this one here is the default, that they're worried that if price never reaches the first take profit, which is 100 pips, then the trade manager won't kick in. And that's absolutely true. So you have to be really sure that your potential trade setup has the ability to reach the first take profit. If you've used your crosshairs and you've tried to measure to see what your target is and it's not 100 pips, you should click load and choose a different. Here we have gold scalp and gold swing. So here's a gold, let's go back to gold scalp. But I did not create a day trade set file for you because I wanted to show you how to create your own. So say this is just too easy to attain, 40, or it's really four pips or 40 points. That goal is too easy. Price is moving really good, you know it's going to do really well, but it may not do as well as the swing set file, which this value here was 100. So maybe you want something maybe in the middle, which would be a day trade set file. So you could click and make this say 75, which is between 40 and 100, and maybe make this 50, and maybe make this 15. So now when price reaches 75 pips, if it gets that far, it's going to move the initial stop loss to break even plus 50 pips. So there's not a lot of room between this, but you've got a trail. Now it's going to trail 15 pips behind the price. So you're always going to have that much locked in. It becomes a risk-free trade at that point. So in order to save these settings, we're going to save it, and we're going to click save, and we're going to click one of these. Gold's, it's not the swing and it's not the scalp. We just created ourselves a day trade set file, which is in between scalp and swing. So just rename it. Call it day trade 1, because you might want to make a day trade 2 with different values. Then click save. Now our trade button has this available for gold as a medium type of trade manager. Now, if you look at the trailing stop method, this is the default, which does move your initial stop to break even plus X number of pips, whatever numbers in the break even lock-in field here, whatever value is here. And then it's going to trail by this many pips. So this is a nice trade set file, but what if you're afraid, no matter what, that your first take profit won't be hit? And what if you don't want to wait for it to trail until price reaches your first take profit? What if you would like the trail to kick in sooner, before price reaches your first take profit, and just keep trailing? Well, we have a trailing stop method for that. So you just double click this and choose delay and until in profit trailing stop pips. Now this will start trailing whenever price reaches your trailing stop. So once it reaches 15 pips in profit, then the trail is going to kick in, and for 1 pip in gain, it's going to move your trailing stop 1 pip behind price. So it's going to keep locking in 1 point at a time as long as the trade keeps going in your desired direction. So it'll keep moving your trailing stop up. This is actually one and a half pips, but it's 15, so it's 15 points. It's good that we're doing this in gold, so you can get used to the difference between pips and points, because it's very confusing. Just remember that because we're in a metal here, it's points, so there's an extra 0 or an extra digit placed. So first take profit in reality is 7 or 7.5 pips. That's still not a real hefty target, because gold can sometimes move 20, 30, 40, 50 pips at a time. So this is 7.5 pips. Break even is really only 5 pips, and the trail is only 1.5 pips behind price. So this is an okay day trade, but if you don't care for it to break your lot size and book half of it, and you don't care for it to reach first take profit first, if you're more interested in a trade immediately trailing, then just choose this method and choose your set file. So we're trading gold. This is an okay set file for trading gold and using this method, and it's not going to wait till price reaches 75 pips before the trail kicks in. The trail is going to kick in if your price reaches 15 pips in profit, then it's going to kick in. It's not going to do a break-even lock-in, because that is not part of this trade method. So don't expect it to book half your lots, and don't expect it to move it to break even at a certain point, because it just starts trailing after price reaches 15 pips in price, and then it keeps trailing 15 pips behind price. So this one, I hope I explained that. I don't know. This is very hard to explain. I know it's probably harder to understand. I know I'm not doing a very good job explaining it, and I'm really sorry. But it's just, these trade managers are so complicated. We've tried to keep it as simple as possible and still do all the wonderful things we want it to do, because it's really magical what it does, and it takes the emotions out of trading. So I think to learn how to use this trade manager is really, really important. So I apologize for my poor explanation. Um, if you have to come back and watch this again, I totally understand. Here's the other two. You can choose do not delay. That means it's not even going to wait for price to reach 15 pips in profit. It's just going to start trailing right away. And I don't know if that's a very good idea. In a really fast market, if you're trading a news event, maybe this would be a really good. Uh, and then here's do not use. So if you don't want to use this trailing stop, any of these trailing stops, then just click do not use. But this is the default here, where it does the break even, lock in, and books half of your lot size. So this is the default. But if you don't want to wait for price to reach your first take profit, then choose this one instead. Okay, so for people who are new at trading, a lot of them, they don't know how to analyze the chart very well. They don't really know how to determine what the take profit or the target could be, so they don't really know what set file to choose. When you click load, do you choose scalp, quick scalp, day trade, swing trade? You have to know how to analyze your charts before you know if you're going to choose a scalp set file or a swing set file. If in the beginning you don't know how to do these things very well because you're kind of new at this, then choose this set file, because you don't have to wait for price to hit your first take profit. It's going to start trailing whenever price reaches whatever values in this field right here. And you can change this. You can make it be whatever you want, 10, 20, and then if you want to save it with a new name, just click save, and then save it with a slightly new name. So that's how you create your own set files, and how you determine what trailing stop method you want to use. A little bit about the first take profit, and there's nothing else down below that you should ever change. And the only thing in this top half, if you're trading on a 1 hour time frame, leave this at 1 hour. If you're going to be trading on a 30-minute chart, just come in here and choose 30 minutes. What it's going to do is it's going to make your stop loss and take profit not so wide, because on a 30-minute chart, your target and your stop are going to be narrower. They're going to be closer together because it's a faster, shorter time frame. So you're going to have wider take profit and wider stops if you put it on a 1 hour time frame. If you're going to be trading 4 hour time frame, choose the 4 hour. This affects your initial stop loss, take profit, your risk to reward ratio. That's right here, average true range. Average true range multiplier is 2.0. That means that the risk to reward ratio is 2 to 1. Your reward or your target is always going to be double that of your risk or your stop loss. So if you're trading in a 4 hour chart, then choose 4 hour for your stop loss trailing stop time frame, and it's going to place your stop and take profit much wider apart, because you need that. If you're trading in the higher, slower time frames, you need wider stops, you need wider take profits. So if you're just using the profiles that are in Green Tomato system for the 4 trading sessions, the Asian, the Frankfurt, the London, and the New York trading session, all of those profile charts open up in 30 minutes. So you're going to want to change this to 30 minutes so that your stop and take profit are not so wide, because 30-minute chart, 30-minute and 1 hour chart are actually day trade time frames, although you can still scalp in a 30-minute and 1 hour chart. But I think that your take profits, you know, are not going to be that wide, and you want your risk to reward ratio to reflect the time frame that you're trading in. So there's nothing else here that you need to change. If you just are going to be in another chart, say Bitcoin, let's click the smiley face, click load, and let's go find a Bitcoin. Here's Bitcoin. We have Bitcoin scalp and swing. So I'm just going to click the scalp. You can see here's the max spread, 6,000. Right now the spread is 29.70. There's no market volatility, so when the volatility picks up, the spread's going to increase. If you don't have your max spread big enough in this field, it won't place the trade. So if you're ever confused why sometimes it won't place a trade when you click buy or sell, then you have to first come check your spread. Is your spread wide enough? Compare it to what's on the chart. You have to make the spread 2 to 3 times bigger, because in times when you want to place a trade, when there's volatility, when the momentum is picked up, this spread here is going to increase. So it won't place the trade if the max spread here is too low. And slippage here is just, that's 3 pips, and that's barely nothing for Bitcoin or any of the other indices. And then we always have the indices, or Bitcoin or gold or silver, always open with a manual lot size set at 0.02. For the default trailing stop method, it cannot break a lot size smaller than 0.02. 0.01 is the smallest, but when price hits your first take profit, it's going to want to split your lot size. So the minimum lot size needs to be 0.02 so it can split the lot. If your account is too small, and I can't really say what's too small or what isn't too small, for trading indices or Bitcoin or gold or oil, you have to use manual lot size, and the default is 0.02 to see what kind of margin you're actually going to be using in order to trade these indices, because the indices use more margin. Each trade is more expensive. So right now I've got 2 currency trades open, and I'm using $32.61 in margin. But if I were to place a Bitcoin or a gold trade or a DAX trade or something like that, you'll see how much it will cost for 0.02, and you'll see it down here in margin. So your free margin is important, and your margin level is very important. So you're going to run into margin problems and risk a margin call if you don't keep your margin level high. So your margin level needs to be at least above 300, 400, 500%, 600%, 1000%. You need to keep your margin level high. That's hard to do when you're trading indices or gold or silver, because they use more margin. They cost more to place the trade. So that's why we automatically set the use manual lot size at 0.02. If you were to use risk percent of account balance, if you chose that, it's going to use 1% of your account balance, but that might be too much. Your lot size for an index might be too much. It might put your account at risk. So if you're going to trade the indices and use my set files for the indices, the default setting for all the indices is this, the manual lot size. Then you can calculate how much an index trade costs. You can see it here under margin. If it's really expensive, then you may not want to trade that particular index, or it means that your account balance is too low. And so I don't think anybody should be trying to trade any of these indices with anything less than $1,000, especially if you're going to have more than one trade on at the same time. If you have, say, $500, you could have one index trade at 0.02, but I'm telling you, you're not going to get rich that way very fast. The index that I make the most money with, that pays me the best, is the US 500, or it could be called the SPX 500. That is the S&P 500. Those are the top 500 stocks in the US stock market. So I like trading the S&P. So we can go here and just barely analyze the chart. Chart's sideways. Everything's sideways right now, which it looks like it's trying to go down a little bit. So, and the Z-lag, both lines are down. So I might want to place a potential sell and wait for, and I'm going to move this line up here because I want the price to pull back a little bit, and then it'll catch the sell trade. So we'll put sell. Okay, it's not placing, oh, it's not placing my trade because I forgot, because I'm talking and I'm not thinking, but this is something you're going to have to learn. I'm in the SPX 500, that's the S&P 500 or US 500. I didn't choose the correct subfile. It's not placing the trade because look at the spread, 89 pips. And if you look at the default subfile that I'm using, the max spread is 8 pips. So there's no way it's going to let me place the trade because the actual spread is wider. So I have to click load, go in here and find my S&P 500. Here's a scalp set. I'm going to choose that. Now it's changed my max spread to 300, which is way above. That's good. At least 2 times bigger, because when momentum picks up, the spread's going to increase. So it's got my manual lot size of 0.02. The only thing I really need to change is, do I want the delay in profit and the break-even lock-in? Do I think that it's going to reach first take profit of, well, it's really 60 pips, 600 points, 60 pips. I would have to use my crosshairs to determine my target. Where's my target? It would be down here somewhere. I don't know if I should be choosing a scalp set file or a swing set file, or maybe I should create something in between, which is a day trade set file. Maybe I don't want it to reach first take profit of 600 points. Maybe I don't know if it's going to reach that or not, and I want to be a little more cautious and not so aggressive, and I'm going to choose delay, because then when it reaches 30 pips or 300 points, when it moves that far, which is half of first take profit, then it's going to start trailing. So when it reaches 30 pips in profit or 300 points, it's going to start the trail, and it's going to trail this amount behind the price. So that's a nice wide trail. That's okay. That'll work for fast markets. If you're trading like the US stock market open and you expect a fast market, choose the US scalp, or create yourself a US day trade, or choose the US swing set. The US swing set, it can really, out of the gate at the US stock market open, it can easily catch these values in the swing trade. And it might take an hour for it to happen, or an hour and a half, but you don't have to do anything because the trade manager is going to handle everything for you. So this is a great set file. This is my favorite indice to trade because it pays out the most and it doesn't cost as much as some. There are some of these indexes that really cost a lot of money to trade. For instance, I don't trade the DXY. I have a DXY scalp and swing set, but I don't trade them. Because they don't pay very well. It's very expensive. They don't pay out very well. And it follows the US dollar, so if the US dollar is really strong, it'll do really well. You just do whatever the US dollar. If the US dollar is strong orange or red, then the dollar index is going to go up. And so it's easy to trade, but it just doesn't pay out very well, and it's more expensive to trade. So when you get into the indices, if you're using the Extra Advanced or the Extra Advanced Pro, you're going to have all the set files in load for the indices, gold and oil, and you're going to find that they trade just so much more beautifully with much bigger strong trends than currencies do sometimes. And plus, you can choose your trading hours. For instance, if you live in North America, Mexico, South America, you're stuck with Pacific Standard Time, Central Standard Time, and Eastern Standard Time, which are really bad trading hours because most of the trends start in the London session, but we're asleep. So you have a choice of getting up in the middle of the night, which is difficult, and you can't do that for very long, and it's not really very good for your health. Or you can trade the Asian Open, and you can trade the Japan Index. I love the Japan Index, and it comes right out. I start trading at any time from right about now. I would place a slope slightly down. This is not really a great example. It's Sunday night, but I would do a potential sell, pull my white line up, maybe so it pulls back to here before it wants to trigger the sell. So you give it a little breathing space to find a little bit better entry. So that's why we pull the white line up and down. So I'm just going to click sell. So now, whoops, didn't do anything. Again, why? Because I never chose the Japan Index swing or set file. So here I have a scalp and a swing, and I could make me a day trade if I want to. So now I've chosen the proper set file, the Japan Index. Now, because I did that, my potential sell went away, so I have to do it again. So click potential sell, drag your white line up there, and then click sell. Maybe this market's not open. Go to journal and see what it says. Go to experts and say what it says. Well, it doesn't tell me anything. So it just could be that the market isn't really open except for it's moving. So it should be open. 772 pips is the spread. Let's go check the spread. Aha, that's the problem. The reason it didn't place is because right now the spread is too big. If we change this to say 800, now we have to press potential sell again, drag the line up. Now at least our spread is correct. It should place the sell. Now it did. So now you see that if any time you don't get a trade placed when you click a button, first thing you check is your spread. Because sometimes, especially for the indices, the spreads can be pretty big. So now we have two sell limits going on. This one is within 10 pips of being triggered. This one's not. So we'll wait and see. Not that I really care. I'm in a demo account. We're just trying to get you familiar with the new settings and how to use this trade button. But I think I've explained everything to you, and I don't really know what more to say about it. But if you have questions about any of this, just either send me an email, or if you're in the Forex training group on Facebook, Retire with Forex Success, you can post your questions in there about the trade button. Looks like the Aussie US dollar sell got triggered. So let's go look at the Aussie chart. So we had a sell limit, and it just pulled back enough to trigger the sell trade. And now we hope that it goes down because we're in a sell trade now. We got a better price because we didn't enter on this candle at the end of the candle. We waited for it to pull back halfway through this previous candle. Now we're in a sell trade. So let's see if anything good comes from this. It's just nothing that I'm not taking any of this seriously, but I just wanted to show you what happens. And now that it pulled back to our entry price, it initiated the sell trade, and now we just want it to go down. Here's our triangle breakout target, which is way down here, and here's our trade button target, which is 58.8 pips. So in this particular trade, it put the lines on the chart, so when this is the first take profit, FTP, and so that's at 38.3 pips. So if price gets down here to this price level, it even tells you what it is right here on the chart, then it's going to move the initial stop, which is up here. It's going to move it to here, which is sell break even plus, and it'll be plus 28 pips. So you're going to be locking in 28 pips. It's going to be trailing after that, and at this point it also books half of your lot size, because this is the particular trade method that we're using. So first take profit is 30 pips. When a price reaches 30 pips, it's going to move the initial stop to break even plus 20 pips, and then it's going to start trailing 15 pips behind the price. So there's always going to be a 15 pip cushion between the trail and the price. So that's kind of a day trade, kind of a scalp trailing stop method, and it's not very aggressive, but if you like to make faster pips because you like to get those wins under your belt, then that's that's just the default settings. It's like between a scalp and a day trade setting. So that would be the one that you would use. Nothing more aggressive if you don't expect large movements, or you don't want to wait for large movements, or you just like to get a lot of wins tucked under your belt because that boosts your self-confidence. So I think that's about it for now. I've gone on for an hour and I can't think of anything else, so either post in the Facebook group a question you have, or send me an email if you're not in the Facebook group. I'm always happy to help you however I can. So thanks very much for watching, and we'll see you in another video.